What's up, guys? Welcome to Invest with a Purpose. Today's video is going to be about GameStop, as you can tell by the title and the thumbnail of this video. Today's topic is going to be a prime example of exactly what this channel is all about: investing with a purpose. With all this Reddit post stuff that's been going crazy and the short squeezes that's been going on, it's really tested us in this time of investing with a purpose or just investing with FOMO, or just feeling like you're going to miss out on something and wanting to be a part of all this hype and make a ton of money really fast, even though you don't really know what you're doing or what you're investing in, or having a purpose or investing with a purpose. It's really easy to look at GameStop and focus purely just off of these two major pops. This one right here, where it popped all the way up to 513 from merely 50 bucks or so. And then another one, here, let me go back, right here, where it's popped up from $50 to all the way up to $200 in a day or two. So I think that it's really hard for us to focus on the fundamentals and everything and trust the process and take your time and be patient with these trades when you're not looking at overall how this stock was a $3 stock just a few months ago to where now is sitting at $130. It pushed up to $500, and we're focusing on that rather than the truth behind GameStop and what's really going on here, and the fact that it's kind of a dying company. Maybe not necessarily dying fully, but it's nothing like what it once was because we've just evolved over time, and it's just, I don't know, honestly, we've always been in stores and everything. And with this pandemic, we've realized that we don't really need stores, and a lot of it's online, and everything that we want to do, we can do online. So therefore, it's really kind of dated. Like, the business model of GameStop is really dated, and there's been talks of GameStop, what I'm saying, rumors of GameStop becoming like an Amazon or going fully online or blah 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 blah, but there are truly just that, rumors. So let's back it up a little bit more even. Let's go back. Even on a 3 year, right? The lifespan of this company. Here, let me actually add a time interval. I'm using Thinkorswim platform. If you guys are not familiar, it's what I use in like all my videos pretty much. Okay, I zoomed out as far as I possibly can. It's not looking like I can pull up the entire thing. I'm on my laptop right now, not my desktop. But we can go back all the way, scroll back as far as we can. This is a 10-year chart where even back in its prime, I would say like 2012, 2013, like 10 years ago, in the last 10 years, it has never even pushed past $60 per share. Like, and now it's at 500, 150. It just doesn't make sense. Even, before the pandemic and everything. Let's take a look here. Let's go back to a year chart. Pandemic was here. Even around pandemic and everything, it was still, $5. It's like nothing really. So let's take a 3 year chart so I can make sure that I'm accurate on that. We're looking at, yeah. Okay. So yeah, even before the pandemic, it's just not looking good, man. Like, it's just not. $6 before the pandemic. Then pandemic hits, it goes down to $2. It didn't even have that much of an effect because it was already down. But look, you go from looking like this, and this is how true investors look at things. They back up and they look at the history. They look at everything. Even when you're trading and you're a day trader, you still want to look at the history so you can see what you're getting yourself into. So right here, it's easy to look at this and be like, okay, I see all these pops. It looks like it's going up. It looks like it's going to keep popping. Let me try to buy the next dip, or let me try to see if I can get in on these pops, which is possible. I mean, if it did go down to, I don't know, $50 or $40 even, or somewhere around there, maybe it might be worth putting a little bit of money in to try to gamble or whatever, because that's what this would be, in my opinion. You could, and you could try to catch one of these pops and double, triple, quadruple your money. That would be awesome. But also, you gotta remember that this is a $5 stock. It's a $5 stock, $5. That's what this is. So, I mean, if you think that you're willing to put your money out there like that for a $5 stock when it's at 50 because of all this stuff that's been going on, cool. You know what I'm saying? You can look at that as adapting, or you can look at that like that's against the trend, but I have enough conviction to where I believe that it'll do whatever. So I'm no financial advisor or anything. So take what I'm saying with a grain of salt. This is just my opinions, and this is my outlook on GameStop. But like I was saying, it's easy to look at it from this standpoint rather than, or no, it's easy for me to look at it from this point of view rather than what most people are doing, and they're looking at it from, let's say, like this point of view where they're just seeing, oh, this is really good. Look, it's popped up, now it's consolidating, it's gonna pop up again. Or you get caught up in like the options and everything, and try to figure out, okay, if these contracts are expiring and blah 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 blah, then maybe I'll be able to catch it. No, like, let's just be real. At the end of the day, we look at this, we it's so far gone that it's hard to even look and see what the true valuation of this company is. But if we zoom in a little, I mean, I gotta zoom in on like the small stuff. I can't even get the big stuff. But like, if we look at this, this is a $5, $6 stock at best. Let's take one more step back and kind of get an idea of why this even happened in the first place. GameStop has skyrocketed recently and done all this jumping because of a fundamental called short squeezing. So smart investors make money when the stock market is going up and when the stock market is going down. GameStop has not been a very innovative and like new company where they've been like bringing new stuff in and doing new things and evolving as a company. And their stock price has shown that. Like I said, they've been declining and really haven't been much of anything. Even before the pandemic, they just weren't really doing anything. So now we look at it and it's popping and everything. It's not because the company is a good company. It's because it was heavily shorted, and with it being heavily shorted by good smart investors, by these people who are losing billions of dollars because of these Reddit guys, like they're betting that that GameStop is going to go down. So then if GameStop goes up, they are forced to get out of, they're forced to buy. They're forced because that's how put options work and everything. And I'm willing to make a whole different video on how put options work and how short squeezing works and everything like that. If you guys are interested in that, leave me a comment down below, and I'm more than willing to break it down for you guys and tell you how it works exactly. But basically, if the stock price goes up when good investors are, or big hedge funds and everything are betting that it's going to go down, and it goes up, they're forced to buy in, which pushes the price up even more. So we have people buying in a couple months leading up to this. This isn't just happening right here. So a couple months leading up to this, people are planning and people are buying into it. So people are buying in. As you can see, it's gradually going up for the last like 4 or 5 months. So it's gradually going up, and once it reaches a certain point of around $20, these hedge funds are just pulling out. So, and when they pull out of their put options, or when they pull out of their of their puts where they're betting that it's going down, they have to buy in. So they have to buy, which is also compounding with the other people that are buying. So as it's just a huge domino effect. So other people are buying, which causes hedge funds to buy, right? So when hedge funds buy, then more hedge funds buy and other investors buy, and then just more people are buying and buying and buying because they are being bought out basically of their put options. So once that happens, like I said, the domino effect of the first people buying, then the hedge funds buying, everyone's buying, stock price goes boom, which is also at this this happens all the time, but at this magnitude it's called a gamma squeeze. So this was squeezed all the way up to $500 when it was a $5 stock 6 months ago. So the true valuation of GameStop is about $5, maybe $7 for real, like at max. And I'm sure that on the next earnings, this is going to come down even more and go all the way back down to where it's supposed to be because it's going to be reevaluated. At the end of the day, we all know that GameStop is really not this stock that it looks like right now. It's not this guy. Let me pull it up. It's not this guy. It's not $200. It's not $150. And it's definitely not this guy either. It's not $500, $400. It's just not. So, in my opinion, I would say if you're trying to short flip this when it dips, by all means, you can do so. But as a long-term investment, you're just investing without a purpose. So it kind of ties into the whole everything. The whole idea of this is that people looked at these small companies like Nokia, AMC, GME, Express. These were all a part of the Reddit Wallstreetbets thing. They all were dying companies, underperforming and being shorted. So they're being shorted for a reason. They're not performing for a reason. They're not performing simply because they're not good companies for the long term. Like, they're not doing anything innovative. They're not doing anything great. When was the last time Nokia had a competitive phone against Google or Apple or any of the competitors in the phone space? When was the last time that Express is actually a pretty decent company, and AMC is also a pretty decent company, but at the end of the day, malls are closed. Theaters are closed for the most part. So therefore, why would you invest in companies unless you're buying the dip? Now, if you're buying the dip, that's another story. So like if you would have bought GameStop at $2 or $3, that makes sense. If you were to buy AMC, I'm going to make a separate video on AMC, so I'm not going to go too far into this. But if you were going to buy a company like AMC, you should have bought it at $1, $2, because it's a really good deal on a company that is worth it. So we back up, and before even no, this is after pandemic. Let's go before pandemic. Before pandemic, look, it has value. The true valuation of AMC is between $15 and $20, maybe 12 and $20. So it makes sense to buy this on the dips. It makes sense to buy these down low and get in and hold it until it gets up. But to buy this at $20 or $15 or $10, like, it's still a pretty good deal for long term because you're looking to sell it at around $15, $20. You're getting a decent deal, but you should be buying down here. Don't buy these and have that FOMO and fear of missing out on something that doesn't even make sense. In conclusion to everything that I'm saying, at the end of the day, invest with a purpose. And with all of this mindless trading that has been going on and mindless investing, where people are dumping tons and tons of money into these stocks that don't really make sense, um, it's just not a good habit, and it's messing up the fundamentals of trading and investing. So if you are looking to invest in GameStop or anything like that, I'm not going to say you shouldn't, and I'm not going to say you should. Like I said, I'm not a financial advisor, but I personally am not getting in on GameStop at $150. Now, if you are looking to get into something like GameStop as a flip or as a investment for the short term or whatever you want to call it, I would look at my first strike price. The first even possibility that I might get into this would be at around 45 to $50. If it drops down to $40, you might want to put in a little bit more. And if it goes down to $30 and $20, really at that point, that should be a sign to you that this is not really the play, because it's just going back to its previous numbers. But if you're interested in that, maybe around $50 might be a decent time to get in. Don't take my word for it. I don't really believe in this. I can't really advise you in something that I don't believe in, and my conviction is not there. So if you're looking to get into GameStop, that's just a ballpark. You see, it's consolidated there multiple times. It's had a support there now, so it's a decent place. So here, if I pull my tool out and I draw a line here, even around $35, you're looking at a support. So anywhere around $35 to $40, you could get in and potentially catch one of these pumps. And then I would but it is just that. It's a pump and dump. It's gonna pump and then dump. So if you're getting in late, if you see it at $100, $200 up here, or even next time. So now this pushed up to this resistance here, right? That's another previous resistance. So now you got to look at it and say, okay, if it comes up to here again, it might stop there again. So if you see it at $100, I wouldn't get in on it. If it pops up, if you're not, you need to invest at the bottom, buy low, sell high. It's any business model is the same way. Buy low, sell high. So buy low at maybe $40, sell high at 100. Buy low at around, $10, which is really where this company has been, around 10, $20. Even really the real true valuation of it is $5. But, if you can get in low and sell high, great. But don't try to catch this on the high. Like I talked to many people that saw this going on and saw this craziness, and they were like, "Man, I want to get in on this. You see what's going on?" Yeah, I see what's going on, but it doesn't make sense, so I can't do it. So they saw it at $100, $300. They saw it pulling back. Oh, it dipped down. Maybe I can get in at 250. You get in at 250 and you ride it all the way down, and you lost 70% of your account. So just be careful with these stocks, guys, and be mindful of that these valuations are not true valuations. This is not the true value of GameStop. This is a squeeze where people have been forced to buy into this because they were betting on it to go down and it didn't go. So be careful, tread lightly, and remember to invest every second of every day with a purpose.